welcome to this week's video update. My name's Scott, and you may notice for those that are regular viewers that this is slightly later in the week, Thursday. So what I'm going to do is slightly change the theme and just recap what's happened over last week and this week. But apart from that, follows the same structure as always. So let's begin and look at where wholesale prices have gone. So it's been another very bullish week in the markets. In fact, some of these figures I think are the highest I've actually reported on a week-to-week basis. So starting with gas, we've seen gas prices rise quite consistently across the curve, anywhere between 8.3 to 9%. So not much difference really between contract terms there. And what we're seeing actually is further outdated contracts are seeing the most gains. Now, it's never good when prices rise, of course, but what's more concerning is where further dated contract terms are going up. This means this kind of high price market environment we're in is probably set to last for much longer than we first forecast. So it's still in a state of backwardation in the markets, but that is starting to tighten as well now. As you can see on the graph, the spread between the top blue 12-month compared to the bottom orange 36-month is tightening slightly. So that's something to keep an eye on. But that's the developments in terms of changes week to week on gas. We look at power, we can see price rises are again quite substantial, and we're seeing the further dated contract actually rise much more. So the 36-month contract in this example has gone up 8.7% week to week, which again is a massive gain. Really, the markets haven't really stopped for breath. They have gone up quite relentlessly almost every single day, perhaps plateauing once or twice. But apart from that, it's been consistently upward for a number of weeks now, in some very strong, consistent momentum in the prices there. One thing I do want to go through is the day ahead market, something new that I've not covered in these videos before, but I'm seeing a lot of people increasingly talk about the day ahead market or the spot market, and perhaps if that's a viable option to go, particularly if you're on a flex contract. So I just want to look into the data a bit and perhaps help you make a choice there. So this is the gas day ahead market compared to the annual forward market. So what we can see is this graph starts from the start of the year. Is from around January to April, both markets were very tied in with each other, so they closely mirrored each other in terms of movements. We can see from about April onwards, we see the day ahead market start to discount itself compared to the forward market. So you can see that blue line start to fall away into the summer months. Now, we would partially expect this. Summer months are typically cheaper in the day ahead market compared to your winter months for obvious reasons, for climate reasons. What we are seeing now in more recent weeks, both markets obviously going up, but we are seeing that start to tighten a bit. We would expect the day ahead market to continue to go up into the winter months, but the kind of key question is, will it go up to the levels we are seeing the forward market at? And that really is a key question. One or two things really have to happen here. Either the day ahead market has to rise to reach that forward market, or the forward market has to fall back down to kind of the day ahead level. The answer is probably somewhere in between what this will do, but again, that's the key question. Is if you do believe in the day ahead market, you make the assumption that the forward market is going to fall down to the day ahead levels as we enter winter. I just want to show you the same graph for power. So I guess the only thing to note here is it's much more tighter. Again, the pattern's the same, whereas between January and April, it closely mirrored each other and then did start to separate a bit. However, we can see the day ahead market has more closely tracked the forward market compared to gas there. Right now, in terms of figures, the forward market for a 12-month contract will cost you around £500 a megawatt. That is a weighted average price. Day ahead market, as of most recently, traded around 400. So that's a discount of around 25%. Not quite half the value as I often hear kind of quoted, but it is a discount nonetheless. But again, as we kind of enter the winter seasons, we would expect the day ahead to keep climbing. So yeah, hopefully that's useful. If you do want any more information on that, I'm sure we can provide that as such. So going back to the more traditional structure of the videos, I'm going to recap what's happened over last week and this week, where we're in Thursday, just to keep it all consistent. So there's three things I've kind of picked out that have occurred either this week or last week. So the first is the German river levels have fallen below critical levels. So this is something that was announced a couple of days ago. Why is this important? Well, it's quite a major river system in Germany. It's used for the transportation mainly of coal barges and oil tankers. Where the water levels are so low now, that is kind of hindering transportation on here. So either barges are having to partially load and not go to full weight capacity simply because the water levels are too low, or they're just not sailing at all. So it's been a very bullish kind of driver on prices this week and perhaps last week as well. And thankfully, I think some rain is on its way to Germany, but it might be a while till we see that river system kind of get back to more normal levels, in all honesty. There is some good news. Rough storage has been approved and it's expected to be operational this winter. So rough storage closed in 2017. It's out in the North Sea, and it used to be UK's biggest storage facility for gas. It's now reopening and it's expected to be operational this winter, perhaps not at full capacity, but at least partial capacity there. At full capacity, the storage site can provide the nation with around 10 days of winter gas usage, so substantial in size, and that could come in use in tighter kind of days and leading into this winter. So that is good news, and progress of that I'm sure will be watched closely by the markets. And thirdly, one thing perhaps I've not touched on really in any of these sessions, but it's becoming more prominent, is poor liquidity in the markets. So for several weeks, we've seen very low liquidity in the markets. And what I mean by that is essentially live kind of bids to trade on, ask prices and stuff like that on the market. So that has been very low. And because of that, it's kind of resulted in pushing prices up higher, because typically if there's no live price, you have to kind of go above the indicative price to kind of confirm your trade, so to speak. So it's been kind of very bullish and carrying that momentum. Now, part of this could be because of the summer holidays. People typically take annual leave this time of year. It's to be expected. However, there's perhaps a more worrying kind of concern that trader sentiment of those that do have positions don't want to sell back onto the market. And there's only really one reason they do that, is they feel prices are going to continue to rise higher, or they just don't want to open a position and go back into this very volatile market right now, which is understandable. So something to keep an eye on. I would expect liquidity to start coming back into September, but if it does remain at very low levels, that is going to be a growing problem for the UK markets. As always, if you want further information, we have our Market Watch live between 10 and 12, Monday to Friday, and we have our website as well, where you can read daily and monthly market commentary. The latest monthly market report is now up there and published as well for July. So thank you very much for watching as always, and I hope to see you again next week.